Moving the needle on founder failure, one conversation at a time. I'm your host, Justin Gordon, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs in the country to help you think through and overcome the top challenges that startups face. Today's guest is Drew Leahy, managing partner and co-founder of Hawke Ventures, which is an early stage VC fund here in Los Angeles. Drew's also one of the nicest people you'll meet, and he was formerly the co-founder of Snapsuits. Drew, welcome to the show.
Thanks.
Happy to have you on here. And where I want to start off with Hawke Ventures is just where you guys are focused on in terms of where you're investing.
Sure.
What areas?
So we're really focused on software and ad tech and martech that complements what Hawke Media as an agency really does every single day, which is growth marketing. So our goal is to invest in software companies where we can leverage our 400 plus clients a month. We can leverage our team of 165 employees.
Right.
We're growing like crazy. Our clients are growing like crazy. How can we invest in software that our team loves, diligences, and is already using or wants to use, right? So that's the main focus of the fund. But we also do some consumer tech where we have deep data, deep expertise, relationships that are that give us the ability to help them explode their growth.
Yeah.
So whether that's a client that we've been working with for 10 months that explodes out from under us, or a referral from another, VC or angel. Those are the two kinds of companies that we really want to work with.
Yeah, and to that point then, like what is your kind of average check size and how many investments roughly are you trying to make a year?
Yep, so 100 to 250K check sizes, very aggressive follow on when we see the companies are doing well. And then we want to do 6 deals a year. That's kind of what our goal is. And we'll do about 30 deals out of our portfolio.
Okay. And you kind of mentioned this a little bit, but in terms of your investment thesis, your strategy, can you just go a little bit deeper into that, what that is right now?
Yeah. So, basically we started Hawke Ventures 2 years ago when we were making a lot of angel investments off the balance sheet. And so what we realized is that we were investing in companies that we were using with our team and that our clients were using. And so, Klaviyo, we are one of the number one referral partners for Klaviyo. And it would have been really nice if we could have backed 250K into that company when they started. That's the perfect example, right? And so we're looking for companies that we can, really wrap our hands around and explode their own growth, right? So, I would love to be able to send, 25 to 50 companies to a portfolio company that I invest in a month. Right. That's the definition of strategic investing, right? And so that's really what our strategy is about, is how is Hawke strategic to this investment outside of the 100 or 250K I put in? Capital's great, but what else am I doing on the value add side to be a bigger partner? Yeah,
and to that point, you said 2 years ago it launched. So how has that kind of evolved in the last 6 to 12 months? How has that changed at all?
Yeah, so 2 years ago I started doing the angel investments for Hawke Media. They hired me, and about a year in, started looking at all of their investments. They had a combination of marketing trades and angel investments. And all the angel investments off the balance sheet were performing super well. And I said, guys, why don't we double down on this side and do a little bit less on the equity side, since it's a lot of time and it's not quite going to generate the returns that these, that the angel investments are doing. And so that's when Hawke Ventures, the venture fund, started. So we did our first close in April. A little under 2 million. And we made our first 4 investments. Then we made a 5th investment recently into one of our clients.
Yeah. And then to that point, with the actual diligence process,
sure,
what does it look like for you guys right now? Everyone's different, obviously, a little bit, but what does it look like for Hawke Ventures?
Yeah. So I created something at the agency called the Hawke Adventure Club. And so it's a team of about 30 different experts across every single department. And we meet every single month. And one of the things I do is bring up the companies that my associate and I are diligencing. Yeah. So there's kind of a several pronged process. We look at companies, we score them, we have some sort of numerical analysis around what we think about them. Then we bring it to the Hawke Adventure Club and we do some audits and we do some creative strategy and we get some feedback from a larger pool of people. And then as GPs, we vote on the companies that we want to invest in. It's really difficult to say what the average time is.
Yeah.
I could diligence a company for 12 weeks because we need to put it on to a client and we need to look at the data and we need to create a case study. And so it could be a little bit frustrating, but because for us, like, we're like, do we want to use this? Like, it's more than just saying like, oh, do I like the founder, and is this a big enough market, and is there traction enough? Am I comfortable? Like, it's kind of deeper than that. And so it can take a little bit longer for us, especially on the software side. Yeah. Because we really just want to roll our sleeves up and like see how much we love it, see what the product roadmap's going to look like, if we can make some suggestions, like, you know, so it takes, I would say it takes anywhere from 6 to 12 weeks usually to do a deal.
Yeah, and you said like see how much you actually love that process. Then what are some of the things in that we're like, okay, this company for sure, like we want to dig deeper into it. What are some of the, maybe those characteristics or traits or anything you've seen so far?
Yeah, so I mean, when I'm looking at a software we're going to put on to clients or put on to our experts, it's like, how does it increase revenue, or how does it decrease time, or somehow save someone money, right? Very basic. And so if it executes on that well and the team likes it, like, that's what I want to see, right? That in combination with the company growing already. So what I really like to see is, I like to see founders who have their marketing together, right? I want to see their marketing operating at an A- or a B+ level already without me, right? Yeah. And then what I want to do is come in and make that last 10% or 15% to make it an A++, right? And so I think a lot of founders are like, oh, I need help with marketing. Like, maybe Hawke Ventures will invest. And it's like, I'm looking for the people who already like have it together, and I can make it even better, right? Yeah. So that's kind of one thing I see. The other thing is, I'm really big into founders who have run businesses before. Like, ultimately, I'm investing in companies that are doing somewhere between 20 and 100K in monthly revenue. Okay. So these are people who have built a business already. Sure. It's not like a startup that hasn't got off the ground yet. Like, we just don't invest that way. We invest in growing businesses. That's what we like to say. Yeah, I mean, it's to your strengths and your skill set already of being able to take it to the next level with what you guys have, it seems like. And then to that point, what are some of those no's in terms of things that you're looking for that, that's just obviously a pass, or at the different levels you pass on? Because you're only making 6 investments roughly, a year. Like, what are some of those things maybe? Yeah, so I mean, maybe it's like some of the things that like are turnoffs, or things that we see that we're like are like a red flag maybe. Right. So I mean, I'm all about execution. Like, I want to see founders just executing as beautifully as possible, right? Yeah. It can be a little concerning when there's like hiccups, or you're trying to test a product and it's not going very well. Like, that's something that is sort of a trigger, if you will. Obviously, there's always going to be stuff, right? It's never going to be perfect. Like, I'm well aware of that, right? But for me, it's all about like execution, follow up, being really like on top of your organization, and I can really see the founders that are like where the light's on, and they're really like executing, and they're really interested to work with us and excited. So I really look for that. The other thing is, I think a lot of companies don't calculate their cost to acquire a customer properly. Yeah. And so I'll look at a deck and they're like, our cost to acquire a customer is $2.50. And I'm like, how'd you come up with that number? And they're like, well, I just did all of my marketing spend divided by all of my sales. And I'm like, no, like that's not really it. So I love like when I can see a footnote that says the cost to acquire a customer is calculated by this Facebook cohort and this Google cohort, and it's, whatever. Like, I like to see that there's some sophistication around that. Like
more depth on that with them as well. Yeah. And then to the point you mentioned, like the GPs making that decision, how does that process go for you guys in terms of deciding on which investments do you have?
Yeah. So, I mean, Eric and Tony, who are the CEO and COO of Hawke Media, we have an investment committee with the 3 of us. And so Tony's in operations. He's very finance oriented and also very founder oriented. Eric is super founder oriented, loves the big picture, is really good at saying no to deals. Like, Eric is kind of the backstop and I'm the opportunity guy. Like, that's our yin and yang, which is great. Like, I think that we have the 3 of us, when we're all really excited about a deal, it's like, it's magic, right? Yeah. I've actually read a lot of people that in the investment world that say like consensus is like really bad, and there's usually somebody who's a naysayer and somebody has to fight for it or whatever. And I think in our case, if we're all excited about it and our team is excited about it and there's data around it, it's like it's a no-brainer. It's like this is the kind of company we want to invest in. So I'm always looking for those like escalating levels of excitement for us, in order to say yes to working with the company, because we're only working with 6 a year.
Yep.
And they're getting access to a massive marketing team and a massive group of clients. So we're really careful about who we work with.
Yeah. And then going just a little deeper into like the actual founders themselves. Can you talk us through a little bit like how you are evaluating them in these meetings you have with them, in these calls with them, and what you're kind of looking for?
Well, Paige Craig is one of our venture partners who works with us.
Yeah.
And we've talked a lot about how every founder is so different. Yeah. There is not a mold, and in fact, I really look for the unique characteristics that make a founder who they are. I was talking to one of my best friends on the phone the other night, and he's capital raising right now. And I was like, just be authentic. Like whatever is the most authentic version of this email that you're writing to this investor for this term sheet, whatever. I'm like, just be super authentic. Like, don't try to be anything that's like unabashedly yourself, And so I tell founders, like, that's what makes you strong is like, what is your strength? Like, if you were the only person in this company, like, what's the main thing you would be crushing? Like, what do you focus on, right? And so I really try to lean into founders' strengths, see how it complements what we do, and then make sure that we can fill in the weaknesses with the proper hires, right? With the proper team. And so I'm really looking for those types of founders that just stand out as people. Yeah. There's no rubric or there's no I really like maniacal founders that are super good at sales, or I really like sort of empathic thinker founders. Like it depends on the business and depends on the team.
And then with that team, then how do you look at the team itself and evaluating them in terms of the investment side of it? Like, what are you looking for in a team? Obviously, again, it could be different between every single team, but I'm just curious in your perspective on what you think about it.
I try to stay away from those Wisconsin Badger college guys.
They're too smart, or they're better than Michigan people? Is that what it is? Maybe
that's what it is. No, I'm just kidding. So there's a lot of kind of people who have different opinions on this. I kind of love a combination of super scrappy entrepreneurs who maybe come out of nowhere and they've built a business before, but they didn't even go to college, or I have a soft spot for those types of people that are just scrappy and hardworking and have the ability to build stuff. Yeah. But I also I love looking at a deck and seeing a COO was at McKinsey and has worked in e-commerce for 7 years and and you look at the deck and you look at the finances and you're like, this makes sense, check, right? And so there's, for me, I want to see a well-rounded team where there's deep experience, right? It's frustrating when I see somebody who's on a deck who's like, I'm the CFO, and it's like, well, what else have you been the CFO of? And they're like, nothing. And you're like, so you're just like a seat in a chair, Right. I don't know. I think that's where I want to see expertise is I want to see people that have done these roles before in some capacity. And I always tell people, if you're trying to hire someone, go take them from somewhere else. Don't hire somebody who doesn't have a job right now, because I'm sure there's plenty of good reasons, but the best person to hire is that person over there who's doing their job, who's been there for 18 months. Go get that person. Yeah. That's just my own.
Well, there's a reason why they're in that job, right? Yeah.
Yeah. Yeah.
And then going into the team a little bit more too, what are some of those issues you're seeing with them? Or it's been 2 years for Hawke Ventures so far, but what are some of the issues you're seeing with the startups and the teams that you're working with so far?
Well, I've seen key hires are so important. Yeah. In my past and in companies that I've worked with, that head of sales or that head of marketing hire, those are the ones that to me feel are really tough. And I've also talked to multi-million exited founders who are no, every single position is tough to hire for. There's not one that's more than the other. They're all super hard. And I was like, fair.
Touche.
But yeah, I think it's balancing that, how much can I pay someone, or what's the equity compensation? How long are they going to be here? What happens if I don't like them in 4 months? How do you compensate a salesperson in the very beginning? There's a lot of those tough questions. And so it's really important to hire the right people. It's really important to spend a little bit more time, maybe spend a little bit more money, and get that right person. Yeah. And you can even do all those things and still have the wrong person. So it's really important to hire properly. Yeah. I've been in positions where you just want to get a guy or a gal in the seat and doing it so you don't have to do it yourself because you're just tired. And like that is the biggest mistake that you can make.
Yeah. And then knowing that obviously the team side of it is one part of it, but also just the business itself or the business model and having the experience from Hawke, like what other things are you seeing, issues or challenges that these startups are going through? Because obviously you have such a strong team that can help them, but what are the other challenges maybe you've seen so far, or anything that maybe stands out for you that they struggle with?
Yeah, I'm trying to think. I mean, I think like when you're early as a company and you have a business that you're not like just building for 2 years and then launching, when you're operating a business and you're early and you're doing like 5, 10, 20, $50K in revenue, like everything is about growth. And so I think like what I see a lot of founders not doing is just thinking a little bit more of like, how can I get just a little more growth? Because that growth will compound, right? And so I teach a lot of sort of exercises around like the growth flywheel, which is like users come into your system, purchasers come into your system, they fly around a wheel and they come out the other side. And then that other side that's coming in is pumping in more growth. And it's like, I used to be a band manager. I used to be an artist. And it's like, when you're showing up to a venue and your job is to get one fan a night to like love you. And it's like one by one by one by one. And then all of a sudden it's 2 by 2 and then it's 3 and then they're talking about it and then it's 4. And it's like, you have to build your business like a customer at a time. And I think that a lot of times founders are thinking so big and, I want to do this partnership and this, that, the other. And it's like, like one by one, like customer by customer, like how can you really flex that? And so I'm a big proponent of that. And it's important for you to be able to zoom out and zoom in and just be able to kind of have both pictures of how to achieve that.
Yeah, it's like what you want is customers that actually love your product in the first place.
Totally.
If you don't have
the
right customer and being able to acquire them. And then with what you've seen in the last, year or two with Hawke then, I mean, the businesses that explode, the businesses that are really crushing it so far, that are working with you, like what is it about them? It's just the perfect product market fit, like the team, like
I'll tell you, it's a combination of product market fit and timing. Yeah. Right? The Ridge Wallet guys, the Bottle Keeper guys, I mean, they're like one SKU companies, but they're massive. Yeah. Right? And it's just they're such great lessons in like how to be smart and keep it simple and like find an audience and like just really do a good job of tapping into that audience that likes what you have, right? And so I think that as a marketer, you're always going to have like the marketer product conversation. It's always going to be, you can't just always put lipstick on a pig and it's going to sell. Like you can't, right? I mean, it's not how it works. And so I think that the brands that have done really well are super good at building a brand. They're really good at managing costs. And they're really good at just finding that right customer. And so what I always say is like, it's really like, in my opinion, like what I've been able to see is if you have a decent product, it's easy to acquire a customer and it's way harder to retain them. Yeah. And it's way harder to keep them coming back. And so like a lot of founders focus on the customer acquisition side and they're just not really thinking about retention. They're not really thinking about like, how do I keep them? How do I have them reorder? Yeah. How do I do all this? Because I spend so much time and energy on the customer acquisition side. How do I keep them? Like, how am I finding the right people? How do I turn off that Facebook audience, which is cheap and they're buying, but they're never buying again versus this audience, which is a little more, but they're buying 6 times. And it's like, it's a conversation and it can be difficult to kind of look at those. Yeah, numbers.
Well, especially I imagine they're trying to grow so fast. They're really worried about, new customers. But as you're looking at the lifetime value, which is hard to think about if you're trying to get to that next 12 to 18 months, how do you tell them to handle that situation, knowing that they're trying to raise money, then to get to the next raise? Like how do you mention that they should approach that situation, the short term versus long term? That seems like a tough situation to kind of. It's
very difficult advice to say like kind of across the board. Yeah, it's so situational. Yeah, right. There's like 100 factors that go into being like, here's what we should do now. Sure. Right. So it's difficult, but I think what you have to do is take a step back and just, you got to have goals. You got to have some sort of OKR structure. And it's like, where are we going? What are the key results? How can we affect those key results? And like, that's all you can really do, right?
Yeah.
And so if it's, well, we need to hire one more salesperson and spend a little bit more money on Facebook ads because we're driving these leads and we're converting them at 40%. So it's like, all right, well, we just need to do more of this. Like, let's focus on that. Like, I think it takes a decent amount of data analysis and an understanding of like what are our main goals.
Yeah.
And do we need capital to hit those goals? Do we have data to support raising capital for those goals? And so yeah, I think it's a difficult like one size fits all.
Yeah. And one more thing on kind of that same thing with the current companies you're working with, are they pretty accepting of having a relatively hands-on, it seems like you're kind of a hands-on venture firm, or is it like they have some pushback for you? I'm just curious on that because there's all different types of, you know, some are totally hands off. Curious how's that going.
I think if you called all 5 of our founders we've invested in, they're like, yes.
Yeah.
Like, please look over my shoulder. Please tell me where I can shore things up.
Yeah.
Like, please be there to help me so that I don't have to like stress about this all the time because like they know that we're here, right? And so it's like the point of our investment is because they want us inside.
The partner, yeah.
And so it's funny because most investors and most founders, like that conversation is like, ooh, your investor's really hands-on, like that's difficult, like, oh no, like be careful. Like that's what a lot of the adage says, right? But when you have these resources and this expertise and this data, and it's like, no, like that's the reason why we want you in this deal. And so, I think that when rounds are getting really squeezed, especially at the early stage of the Series A, we found time and time again that like people want us in their deal from other capital, which is like, that's one of the hardest things. If you're an investor and you don't have a lot of deal flow and you're trying to get into a good deal, it's like, well, why should I be in this deal?
They? Yeah.
And so it's great that like our founders respect it and appreciate us and want us to be in their deals. Sometimes we don't have the capital outlay or we're not going to invest, but they still want us in the deal. And so it's a big old game,
Yeah. What are you most excited about right now in like the future of the startup landscape, things you're seeing, trends you're seeing? Yeah. What are you excited about right now?
Well, the ecosystem that we really focus on is this sort of e-commerce, digital, software meets direct-to-consumer subscription with like this combination of retail. And it's like all this like consumer products and consumer technology and how it touches and creates interactions. And so like that's the whole kind of ecosystem that we live and breathe in, I mean, look at what Shopify has done for entrepreneurship in this country, right? I mean, if we really zoom out, that's the ecosystem that we play in, right? We make websites, we grow companies with Facebook ads and email marketing and SMS marketing and content, and that's the world we live in. And so I just get really excited when I see super cool tools that like hit my desk, and like I nerd out about the software side.
Oh yeah, well for sure.
Like, I mean, I love a good consumer tech company. I love a good consumer brand, but like there's just an element of risk in consumer that doesn't quite exist as much in the software side. It's a kind of a different kind of risk in my opinion. So, but I'm like an operator nerd. I'm like, oh my gosh, so I could like throw on this Facebook ad plugin and I could integrate it with this Shopify app and like we'll get all this extra data and then we can do this retargeting for LTV. Like that's the type of stuff that I geek out on.
Yeah.
And so when I see these products hit my table or come into my email, and I talked to a founder who's been working in the space or came from an agency and built this technology or whatever. Like I love that.
Yeah.
And so that's what I'm looking for ultimately. And then on the consumer side, like the brand and the data and the founders, like that's what leads everything. Like I'm not like, man, I'm really looking at stuff in the consumer AR space. Like that's just not a part of our like, not that specifically, but like we don't have like big theses in consumer or software. It's just like, hey, like what's working? What are great ideas? We want to be a petri dish for these ideas and grow them into massive, mighty oak trees. That's what we want to do.
Yeah.
And so that's kind of like why we've built this ecosystem with Hawke Media and all of our partners and our investors in our fund and everyone. It's like, how do we bring all this to the table to accelerate stuff that's really cool and working really well.
Yeah. And then even within like venture capital itself, like where do you see that going the next few years? Like what are some things you're noticing, changes maybe coming up?
Yeah, I mean, look, I think that people have been writing the last few years that very niche focused funds are going to be really successful because they just have a very concrete purpose.
Sure.
And they're also value add. And so that's nothing to say that, you know, the big VCs that have been around the last 10 years or even the last 5 years aren't going to do really great. But there's a pocket for these sort of micro VC funds, anything under 100 million, where they're focused on a particular category or a particular sort of, you know, I think it's beyond a thesis. It's more like an algorithm is what I say. Like the way I'm looking at companies, they have to check so many boxes and there's all these little nuances and things that have to just be perfect. And then I'm like, oh, great. And that's not just like my opinions. It's like people on the team, it's clients, it's data. It's like a very massive like kind of diligence process that we run to just make sure that everything makes sense. Right.
Yeah.
And so, you know, I see that sort of world being much more prevalent, and we see funds starting up all the time.
Yeah, that's
and it's like I go to all these VC events, these young VC events on the West Side, and get invited to these things, and there's like a new fund or a new GP or a new managing partner or a new associate or whatever, and I'm like, wow, this is great. Like more capital into the ecosystem, so many entrepreneurs who want that capital. And so I think it's cool just seeing how people are starting to link up with founders that have a very specific need and a very specific niche.
Yeah.
I talked to a woman this week who's starting a venture capital fund for bugs.
Really?
For bugs.
That niche. Yeah.
I mean, but like, it's not like it's that. It's a huge market.
A lot of people eat bugs across the world. If you look at that, yeah.
I mean, there's bugs in all sorts of different food and alternatives and stuff, and so it's fantastic. I was like, this is so cool. This is so amazing. Like, I really want you to find LPs that like want to invest in bugs. Like, this is awesome, you know?
Yeah.
And so yeah. I mean, there's like I find that to be really extremely interesting. And so, if you're like a fund manager or you're at a family office, like, they're going to start seeing so many more of these like very niche funds. And so like, I think we're going to start seeing family offices create more fund of funds where they're like putting these small checks into like a bunch of really cool niche funds that don't even really touch each other at all. Yeah. But they can see like what's popping and like where those GPs are finding these really niche growing products. And I mean, I think that's super exciting. And so I think that's where the VC industry is going, is having a lot more smaller or medium-sized funds.
And to that point, though, how do you think that changes things for the entrepreneurs themselves then? Are they just going to be looking for smaller ones? Like,
well, no, I think it actually makes capital raising easier for them.
Okay.
Like, you know, I ran a custom suits company with my brother, and it's like if there was a fashion tech fund that was focused on men, it's like I would just go to them and I'm like, here's all my data, like here's what we're building, like, do you like me? Cool, let's go. So I think it actually makes it easier for entrepreneurs if you don't just have to like bang down the doors of these like huge venture capital firms where you don't have a relationship with them and you didn't sell 3 companies. It's like there's all these like, it can be so difficult to navigate that space. And so at least like VCs, they have websites, they tell you what they invest in, like, and it's the entrepreneur's job to find the people that are interested in what they're doing. Yeah. And they got to make that connection. Yeah. So I actually think it makes it easier.
Yeah. And then going into like more with where the industry is going in terms of actually where different companies will be started, where do you see, I guess, more and more companies being started? Are there certain industries where you're like, yeah, there's going to be more companies in this space or this space? I'm just wondering if you see any of that kind of happening soon in particular areas.
I'm so bad at the like, here's where things are going question. Yeah. I'm like, where are things today?
Right now.
Because that's to me like what I focus on. And I'm so like data oriented with the startups and traction oriented that the startups are doing. It's like, oh, like you found that? Like you did that? Like, oh, that makes sense. Like, wouldn't have thought of that. Stereo is like the best example of this. Like, why wouldn't somebody start a network for Uber and Lyft drivers to play music and get paid for it because musicians want their music heard.
Sure.
Brands want to target people in cars like radio, and rideshare drivers want to make more money. And it's just like they stapled together all these disparate parts and like created a tech platform, got customers, created revenue, and you're just like, whoa, like how did you just do that? Like, and that's something that I couldn't have sat here into microphone and been like, yeah, like, man, like rideshare, like media, like it's hard until you see it and you're like, that makes sense. I see the crystal ball with this. Yeah. So, yeah, it's a long-winded way of saying, I don't know.
That's fair. I mean, how many people actually know is the question. You know, like, everyone can guess, but we don't. Some people have more knowledge maybe than others, but it's still kind of a crapshoot and all of that, right? So I guess in that way, it's like, yeah, you look at what you can control right now, what's out there based on the actual data of everything.
Yeah, I mean, the one category that I've been a big like futurist in is like personal data management, and like what happens when you have. Like, theoretically speaking, if I could have all of the data that I put into the digital world in one space where I could do something with it, I'm like, that's just game changing. Like, I just can't fathom why that somehow doesn't exist yet. Well, I know why, because it's, you know, it's these massive castles in the sky that like can't work together because their business models don't work that way. But I just see that space being very, very big for the future. And it's tough to do. Like, there's no silver bullet. There's not like, oh, I have this idea, I'm going to build it and do it. It's like how are you going to do that? Because if you get to a certain point, somebody's just going to turn you off. Right. You know, I've seen browsers get built. I've seen ad networks get built. I've seen, you know, people make APIs to like tap in and single sign on, like all this stuff. And it's like, yeah, but that's never going to scale. Like, no one's ever going to allow that to happen if you have a massive base of people like taking data from your platform, combining it with somebody else's and creating value. So, yeah, I think that space, like if I'm being like super future-y, like that space is just massive, I think. Yeah. And it's going to affect our daily lives. Like, I'm very much into like, what is your daily, like, how is a company affecting your daily life? Like, I take Uber every day, right? If you have a direct-to-consumer houseplants company, you look at the plants in your house every day and you water them and you do this stuff. Like, how does it affect your daily life? If you're a company, what is software that affects your daily revenue, your daily marketing? You know? Yeah. So that for me is important.
Yeah, and there's something with that too. I know people seem to be concerned about their data and privacy and everything, but like, you think about how that data makes it personalized for them and better for them. And I think if consumers start to understand that more and more, they may be okay with some of the data being like shared, but we'll see where that ends up going.
Yeah, I mean, ultimately, I think it's about control and it's about opt-in. And I mean, the truth is if you can start combining data silos, like the data becomes like exponentially more relevant and valuable. And I think that's the critical mass that we need to hit soon.
We'll see where it goes. And
we will.
We've talked a lot about, obviously, your fund and where that's going and what you're looking at. On the startup side of things, like, what do you think founders should be asking these venture capitalists or other funds to find the right fit for them, find the best value add for them? Like, what do you think they should be asking, looking for?
Yeah, it's a great question. I feel like you can learn a lot about the VCs that you're talking to based on the companies they've already invested in. And so for me, it's like, do your homework. Like, maybe there's a way you can catch a founder at some event that's speaking and be like, hey, like, how is the partner at Excel Ventures you're working with? Like, how is that going? Or like, whatever. And they'll be like, they're amazing. They've done this and that. And so I think it's more of like doing your own homework and like understanding how these companies fit in the space. And obviously it's like you can ask an investor, like, so what are the type of things that you do for your companies once you invest? Like what would you do with us? If you were, if everybody was super excited and you invested, like, how would you work with me? Right.
Right.
And that's like a totally fair question to ask. So yeah, I think it's just about like doing your homework and then just asking some questions about like what operations would be like.
Okay.
And a lot of times they'll tell you too. They're like, look, we got a recruiting, like, Andreessen Horowitz is famous for like having all these services that are around their investment. So it's like they like pitch that, right? That's part of them wanting to get into a deal. And so, or if you're somebody like Quake, and you want to be in a deal, you're like, well, look, like this is the cohort that we run, and like here's all the things we're going to teach. And so like a lot of that's kind of told to you.
Yeah.
Especially if you're talking to like a more niche value added firm, it's like it's very apparent what that relationship should look like. I
guess too, for the founders, I mean, you mentioned there being more and more niche different firms out there. Then should they be looking for something that more so aligns with what their kind of industry is, or someone with a bigger network, potentially a bigger brand name, I guess you could call it? Like, how do you think they should kind of approach that type of situation? That's gonna be a problem more and more, I guess. As we go on.
No, I mean, look, if Greycroft like loves your deal, like that's awesome. Like totally, like you should do that, right? Especially if like all the interests are aligned.
Sure.
But like it's really about like energy and like how people feel about your vision, and like you're gonna be with these people for years, right?
Yeah.
And like I'm on a texting basis with basically like all of my founders, and it's like it's crazy to think that like potentially 4 or 5 years from now, like I'm still like having a relationship with that person. And so it's like that's the really important side, which is like, do you get me? Do I get you? Or do we have the right expectations? Are we aligned? Like the people side of it is super important. And so I think that goes sometimes beyond like thesis and like investments and stuff like that, right?
Yeah.
I have a friend who's on a board with Sequoia and with I'm blanking right now. Another massive venture capital firm. And they basically like go back and forth, and they have very different philosophies on growth. And he's like, it's fascinating to have see this sort of like gentleman's conversation, like going back and forth like a tennis match. Nobody's arguing, but there's very different viewpoints. And so sometimes that's a good thing too, right? Like you don't want to have everybody who's just all bought in and everyone's got the same thing. Like sometimes you want some varying opinions. So it really just depends.
Yeah. And then with you at Hawke Ventures, what is your day-to-day like? How is that? I mean, some people have structure in ways, I guess a lot of meetings potentially, but I'm just curious of what your kind of day-to-day right now at least is like at Hawke Ventures.
It's a lot of different things. It's so many different things. We're looking at companies every day. We're helping our current portfolio companies grow or do whatever, hit their goals. I'm working with the Hawke Venture Club in some capacity on what are we looking at? Why are we looking at it? What are the data? I also teach the Hawke Venture Club like tidbits on venture capital. So I'll do like, what is an SPV, and like what are preferred shares, and like what's confidentiality, and what's private, and what's intellectual property, and like so I do a lot of that stuff too. I just recently started a new program for family offices, which is sort of how do I teach sort of G2s, G3s, next of kin about venture capital, because it's kind of like a black box for a lot of people. Like they're like, what is a VC? Like what do they do?
Right.
And so I'm taking a lot of the kind of courses that I've sort of developed internally and with some of the teaching that I do at accelerators, and I'm like bringing that all together for family offices so that if their kids want to get involved in the family business or whatever, like venture's kind of the gateway drug to like making money with money. And so what's IRR? Like, what is an internal rate of return? Like $1 here is like, how does that return? Like, and so if I can bring startups and bring deal flow and stuff into the mix to like actually teach by doing, that's kind of the end goal, right? And so I'm developing a course for that right now, and I'm talking to founders a lot. I think that's my favorite part of the job is doing the founder piece. And then we also do like SPVs with our investors in our fund. So when I find a deal I really like, I write a check and then I say, hey guys and gals, like, do you guys want to put into this deal specifically? That kind of thing. Here's why we're doing the deal. And so a big part of what I've built is sort of like a venture collective. It's more than just like, write me a $3 million check and I'm going to deploy it and I'll send you quarterly updates. Like it's not that kind of schedule. It's much more of like a relationship on all sides. And so I think that requires a lot of work to bring those relationships together. But I think it's super important, and it can be a huge difference in a company to have the right person that can come in at the right place and really accelerate some aspect of their business.
Yeah, and you mentioned it earlier, how you got into Hawke Ventures, but why did you end up doing it?
So, I've always wanted to figure out how I could scale myself.
Yeah, and
when I'm just working on one company, and I'm just the CEO or the CMO or the product or whatever, I'm just doing my job. And I think what I really like about the venture fund is that I'm scaling myself and my experience and all the things I messed up as an entrepreneur over years. It's like, hey, don't do that. Here's why. And they're like, oh yeah, I definitely don't want to do that. So it's like, I have all these anecdotes. I always joke around, I want to have a big jar of anecdotes on my desk. I'm like, hey, let me reach into this. And don't raise with too high of a cap, because if you can't raise enough, you will be really hurting. So maybe you should lower your cap. And I wish I would have did that with my last company. It's and so it's really I love that relationship of sort of coaching, mentoring, whatever you want to call it, that sort of value add relationship. I love that aspect of it. And so the thought of being able to do that across 30 companies in the next 5 years is so cool to me.
Yeah.
And what's really cool is when you get the feedback that it's working. You guys are awesome. You're my favorite. Thank you so much. And you're just oh, that's kind of nice.
Oh, great.
Oh, I didn't know how that was going to be. So, and you're just going at it every single day, and you're just hitting the pavement, and you're just, and you're just growing the whole ecosystem. Right. And so, day to day, it's just a lot of blocking and tackling and trying to get everything moving in the same direction.
Yeah.
Yep.
Yeah, and I like that you mentioned that whole kind of scaling yourself, and that's even with Startup 2.0 and doing these interviews, we can share some of these insights that these amazing entrepreneurs and investors have with other people, and that obviously helps others grow their business, and you have way more hands-on with obviously the companies you're working with your companies then too. So Hawke has a bunch of resources and everything there to help. Are there any other resources, people, conferences, books, podcasts, anything else that you think you've kind of directed towards your startups or have suggested to the startups you have there at Hawke Ventures?
Yeah, I'm not really I'm so deep in the kind of operations, and I don't, there's not really any, I'm trying to think. There isn't really any anything else that I can think of. I mean, sometimes I'll tell founders, I'm listen, you haven't started buying Facebook ads, just go learn how to do it. It's all right there. Facebook has every resource in the world for you to be
correct,
here's how to spend money with me.
Of course.
And so it's always kind of interesting when founders, haven't maybe rolled up their sleeves and just did it to get the data or whatever it is. And so, I'll point people in that direction from a resources perspective. I don't know. I mean, I most of the founders that I'm talking to, they are executing, running 80 miles an hour every single day. That to stop and recommend a podcast and smell the roses. I mean, I don't know. It's hard, right?
Yeah.
Or, I mean, I always tell people they need to take time and they need to take care of themselves and stuff like that. But
well, it's one of those things too, just looking at obviously they're so focused on trying to grow their business, like you mentioned. Of course, that's the whole point of it. But it is some of those things where you wonder which things could help them accelerate that, or which things are that they're missing out on. Even just you saying, recommending, just go look at this tutorial on how to run this ad, because it'll help you with your business. You know, there are things like that, it seems like, at least. That can be helpful. Is there anything else in terms of entrepreneurs, founders that you'd mentioned we haven't talked about that you suggest to them, or anything else you'd kind of like to talk about with that?
Yeah, I mean, it's really interesting. I always talk about how I invest in growing companies, not starting them. I have been a founder so many times where you're building a company, you're getting to revenue, you're acquiring customers. It's your job to get to this place where I just can't say no to investing. And I can say that because I've literally been in that position, and I'm why won't you invest? Come on. Well, it just doesn't fit our thesis. And I'm so what? Come on. What are you talking about? And so it's the entrepreneurs, I think, forget that the guys on the other side and gals on the other side, they're entrepreneurs.
Yeah.
And like, it's a really weird thing to think about, but it's like, it's so true. And actually when I was a founder and raising money and people would talk about how VCs are entrepreneurs too, I was like, I don't like why. Like, I don't really get it, you know? But now obviously it's much more apparent to me.
Now you understand.
And now I understand. But I think, you know, it's like the founders, they got to give you a reason to say like, what's like, you have to create this like momentum where it's like, oh my gosh, I can't not invest.
Yeah.
Like, and if you can't create that, like, I mean, good luck. Like maybe you'll find somebody who really loves the space that you're in and will invest. And like, that's what you need in the early stages. But
yeah,
I just tell people like, never stop putting out good news. And whenever I see founders that are like, oh, like, I don't want to share this. I'm like, all right, good luck. Because that's just not my style. Like,
yeah.
I mean, I understand, like, I mean, we've invested in 2 companies that are sort of stealthy and like not quite launched or not quite like public, and you know, they're making money and they're doing great. And like, I understand why some companies choose to do that, but for most companies, it's like growth solves all problems. The more people that know about you, the better. Like, just continue to grow. Don't worry about the competition. Just execute. Like, find customers. I mean, know your competition, obviously. Yeah. But like, don't be so like neurotically obsessed with like, oh, people are gonna find out about what I do. It's like, that's a good thing.
You probably like, want them to.
That's actually a good thing, you know. And so we invite companies to the Hawke Cage, which is the Hawke Adventure Club's sort of presentation space for companies to come and pitch Hawke and Hawke Media and Hawke Ventures. And so I get 2 very different founders. I have the founder that's like, yes, I want to be on video and do a Shark Tank kind of thing. Like, I love it. And then another founder that's like, oh, like, yeah, I don't really want to do that. And you're like, okay, like, that's fine. Like, if that's how you feel about it, like, that's totally cool. Like, you just, like, you won't get the opportunity to come.
You won't be able to then, yeah.
Pitch us, you know? And so it's like, it's just that philosophy of like, how do we share? How do we grow? How do we do more? How do we get the word out there? Like, that's just our style, right? Obviously, we're not investing in military hardware. So it's like, cool. Like,
right.
We can think that way, right? So yeah, I think, you know, my advice to startups is like, just do everything you can to grow. Yeah. Find the right people. Give me reasons to have to invest, and never stop putting out good news.
Yeah. Drew, what's the easiest way for people to get in contact with you?
Just Drew at Hawke with an E, Hawke with an E, media.com. That's the easiest way. I said LinkedIn once on stage, actually and that was such a mistake. I was like, no, that's actually not the best way. The reason why I said that is because I wanted to be able to get a sense of who was on the other side.
Who they are, yeah.
But then I was like, this isn't manageable. Like, this is too much. Like, this isn't helpful. Like, I don't work inside of LinkedIn. Like, I work inside my email. But yeah,
you have 500 new requests for and then you're like, yeah, this is going to be an issue, I think.
Yeah.
Drew, thank you so much for coming on the show today.
Thanks for having me. I appreciate it.
Thanks for checking out Startup 2.0 from Spark XYZ. If you want to learn more about startups and investing, you can check us out and join the ecosystem at sparkxyz.io.